right, so guys, I want to talk to you about one of the things that I hear the most from aspiring entrepreneurs or entrepreneurs. One of the first things that they say is, man, I just don't have the capital or the money to get started. And I'm here to tell you that you are in the wrong mindset. Sure, you know, the saying goes, it takes money to make money. That's true, but you don't need hundreds of thousands of dollars or millions of dollars to get started really in any market share. I want to talk to you guys about some of the most successful companies in business that are very well known, like Apple. You know, Steve Jobs created Apple and he bootstrapped that. Coca-Cola, Hewlett-Packard, Facebook, Microsoft, and the list goes on and on. Those are just a few of the main top companies that I think everyone will know to kind of give you an insight and an idea that you can bootstrap. I'm going to talk to you what Bootstrap is. It's something that I did at Redline Steel and how I created my company. Basically, Bootstrap is not taking venture capital or an outside revenue stream and self-funding everything from the beginning. Now, you know, obviously, all these companies are IPO or publicly traded, but they started off without venture capital. So they probably use their own credit cards, their own using like personal lines of credit, whatever they could to get the capital themselves without going and finding it from someone else to have a vested interest into your company. I think a lot of companies that are very, very successful started off that way. And this is my reasoning behind that, is that when it's your own money that you're playing with, it's something that you don't want to lose, right? It's something that you devote and give 100% to, because you know if you fail, not only did you fail yourself, but you also lost all of your money. So the risk is so much higher for yourself because, you know, nobody has anything to lose. Now, on the flip side, if you're working with other investors, obviously they're taking a large substantial risk into your company. And with that, they're going to expect something in return. For me, I think money's just a byproduct. It's something to help you get started. But if you're really vested and you're really wanting something 100%, you can do it. You don't need to go and get, you know, venture capital money to get started and to give them a percentage of your company. If you really believe in it 100%, you'll find a way. You'll find a way to make it happen, to get it started, and to constantly flip revenue quarter after quarter after quarter. You know, the first couple of years, it's primarily just years of growth. You know, I like to look at companies as like a newborn baby, and that it constantly has to be nurtured every day. That means you're not going to get off time. You're not going to get weekends off. You're not going to get to go watch the football game. You're not going to get to go on vacation. And there's a lot of things that you're personally not going to be able to do the first couple of years if you want it to be successful. And that's the reason why like 8 out of 10 startup companies will fail within the first 3 to 5 years of opening their doors. Is multiple reasons. One, they're not nurturing their company to the best of their abilities, meaning that they're not devoting 100% of their time to make it happen. The second thing I would say is that they're drawing too much of a salary, and they're taking it out of the company so that it can't continue to scale and grow and get that momentum. Investing back into equipment, better processes, innovating what's currently in place and trying to continue to grow. Third is a lot of companies will get complacent. They get comfortable, and it's an issue. It becomes a cancer. When you're used to the same thing every day, the world is constantly changing and you have to innovate with it. So those are the 3 main things that I can think of right off the top of my head that companies either need to do to succeed or that aren't doing and they're gonna fail. So I wanna talk about some of the advantages of basically bootstrapping your own company. One is you have total control. You don't have a round of investors telling you how to run your own company. That's something that I wouldn't like personally. It's something that I will never tolerate. I don't like to not be in control. At the end of the day, I can make every decision for the company, and that's the only way that I like to run things personally. Now, there's always people that you can invest back into, and you value their opinion. But at the end of the day, if you own your company and you own at least majority shares, you need to be able to make that final decision. So that's a huge advantage of bootstrapping your own company, that you get to make those power plays, those overall decisions. You don't need a board of directors telling you what to do, how to do it, and when to do it. You're also not held to so much stress of those investors that you have to hit certain timelines. Basically, you're on your own time, right? At the end of the day, you get what you put into it. If you want it to be successful, you're gonna give 110% every day, 7 days a week. Now, on the flip side, if you are just looking to make an extra dollar, then I mean, there's companies out there that you can either partner with, or you could just be complacent and comfortable, and that's your prerogative. You just need to reverse engineer where you want it to be. Some of the disadvantages I would say also is obviously any venture capitalist, they're going to want some type of somewhat guarantee, right? You're probably going to have to sign over some type of asset that's worth more than, or worth at least what they're putting into it, so that they can protect their assets. So I guess in a sense that would make you want to work that much harder to make sure that they don't come and take your house, or they don't come and take your cars, or the equipment that you need to start that company. You don't pay it on a scheduled payment, then they come and repossess that piece of equipment. So there's a lot of risk from all sides. I'm just a firm believer in Bootstrap, and that's what we've done at my company, and it's been very, very successful. I say all of this just to come back and say, guys, if you are stressed and worried that you can't start your dream company because you don't have the capital to do it, I'm here to tell you in your face, straight up, that's bullshit, and that you can do it. Look at Apple, Microsoft, Hewlett-Packard. Those aren't cheap items to just go and make and manufacture, right? They created a beta test, a sample, tested the market, A/B split testing, and then they slowly grew, and they just continue. It's like a big train. It takes a lot of momentum to get it going. But once it's going, it's going. You know what I mean? So don't stress, or don't limit yourself because you think you can't start a company because you do not have the revenue to get it started. Soft scale it. Start it at part-time. Start it as a proof of concept. Test the market. Talk to a non-biased person, somebody that doesn't necessarily know you, and give you proper feedback. Do your business plan prior to even starting. You can do it. I promise you. Thanks for watching. Stay tuned for other marketing tips. Thanks, guys.